Hey everybody, Courtney Smith here, and I want to talk about China. China, of course, is the one of the two most dynamic big countries in the world. The other is the United States of America. Most other countries like Europe, Japan are pretty much basket cases. They're just flatlining, like in the medical TV show. Beep. That's Europe and Japan. So what we have is we have a situation where I got quite bullish on energy not long ago, and that turned out to be quite incorrect. Now, fortunately, I didn't actually buy any energy stocks or any crude oil or anything like that. But the reason I was wrong, I want to go into because it affects the rest of the world. In today's edition of the Financial Times was an excellent interview with, let me get his name right, Vincent Clerc, who is the new CEO of Maersk, the second largest container shipping company in the world. Now, if you followed me for any time, you know I obsess over shipping. And the reason I obsess over shipping is because it's a reflection of the global economy. High shipping rates means high demand for shipping, which means a strong global economy. But right now, the Baltic Dry Index is not looking particularly very good. So that was the first thing that alerted me to perhaps the rebound post COVID shutdown in China is not coming to fruition. What his point was that people are not going out and splurging in China because they're still stunned by the zero COVID lockdown policy. They're still in a state of shock, and as a result have yet to go out and splurge, which I anticipated that they would, which would increase the demand for energy. Kind of falls into the duh category. But there's more to it than that. First of all, the government has just recently, a couple weeks ago, set their target for economic growth at 5%, the lowest growth rate since Deng Xiaoping took over from Mao Zedong. Guess what? They probably won't even hit that. When the Chinese government says 10%, that means it'll come in at 6. If they say 5, it'll probably come in at 2. Now, one of the things is we can also see in January, it was just released that profits of industrial companies dropped just about 23% in China in January, which means they're not seeing any increase. Now, January is kind of a transition between zero COVID lockdown and the release of those pressures. So we'll see if they improve in the future. But as of January, profits are dropping dramatically. But there's another thing is that part of the reason why the Chinese people are still in this state of shock is because they remember what happened to SARS. Now, people in the West, SARS ended up being a complete fizzle in the West, but I was in Southeast Asia during SARS and it affected us in Singapore. But all over Southeast Asia, in Thailand, Malaysia, Philippines, etc., and in China. And so, whenever you would go into any sort of public building, like an office building or a mall, they would take your temperature. And if your temperature wasn't normal, they'd send you home and tell you to go see a doctor because you had a fever, which is one of the symptoms of SARS. By the way, they did that a little bit with COVID for the same reason. It's a quick way to diagnose if a person has a problem, one of which could be COVID, could be the flu, could be whatever. But the point, anyway, is SARS actually had a big impact on the economy in Asia, Southeast Asia, East Asia, North Asia. And as a result, they still remember that because that was a big deal back in 2003. But now let me get to the bigger story of China and why it's not coming back. 70% of the savings of Chinese people is in property. Property. And of course, as we have covered here for many, many months, the collapse of the property sector in China, the Evergrande story. I told you exactly what was going to happen That's exactly what the government has done. The main thing is they're just being patient and letting it all work its way through slowly, slowly. But in the meantime, that still means there's a huge overhang of empty buildings throughout China. Incomes are down, are reduced, so people can't afford it. We see mortgages are flat on their back. We see that credit standards are being tightened by the government. That happened last year. And as a result, not very many people can get a mortgage. So there's no new demand for property. So property values have collapsed. I don't like using strong words, but I think collapsed is the correct word. So if 70% of their savings are in an asset which has dropped tens of percent, that doesn't kind of make you want to go out and buy a new BMW or a new 60-inch, oh, I'm sorry, 80-inch TV. Do you see what I'm saying? So I think that his points were very, very good. And what we're going to see is it's going to take a very long time for China to rebound out of the zero COVID policy. Now, on the good news, Jack Ma came back to China, and it was open and it was known. There was no adulation. He knows the Chinese government does not want him to be revered anymore. But it does show that perhaps Xi Jinping is backing off on his anti-business policies by welcoming back Jack Ma, the founder of Alibaba and Ant. Now, I also suspect that he's coming back because he's agreed to separate Ant from Alibaba. He'll stay with Alibaba. Ant will go off and be another company. That's how antitrust is done in China. They come in and they say, "Nah, you don't get to keep that. You got to give it away." So I think that's what you're going to have going on now. So to finish this up, I'm looking now for a much slower growth in China. The government says their target is 5%. So to me, that means 2%. But if the US and the West go into a recession, which I expect, that means that China could actually go into a recession as well. Their response will be to ease monetary policy and to do other forms of fiscal stimulus. But the reason I bring up monetary stimulus is because that will cause a decline in the value of the Chinese yuan in order to try to stimulate more exports. So you want to be short the Chinese yuan, but it's also bullish for the stock market because anytime there's an increase in liquidity by a central bank, it immediately goes into the stock market. So let me leave it there, everybody. We will talk to you later, but there are other ramifications of this slower than expected Chinese growth, and we'll explore those in the coming weeks. Talk to you later.